Hi everybody, in this video we're going to have a look at specific or unit taxes in more detail, and you'll remember that this is a type of indirect tax. That's a tax on goods and services. And because it's the firm that will be paying the tax to HMRC, what this effectively does is it causes the costs of the business to increase. So in effect, when the tax is applied to the product, it causes the costs of the business to go up. If we want to show this in a diagram, you might be asked to do this in the exam, or you might have to look at a diagram and explain what's happening. If the costs of the business go up, you know that that will affect supply. And when the costs go up, supply will decrease. And when supply decreases, left is less, the supply curve shifts to the left. Because this is a specific tax or unit tax, the shift of the curve will be parallel to the left. That's important. Then we can put in our new equilibrium. And we can then find out what the total amount of tax being paid will be. And we can do this by starting at the new equilibrium. So always start at the new equilibrium. Then you draw your dotted line down to the old supply curve. And then you come across, when you bump into the old supply curve, you come across to the left. And this gives you this rectangle. And we can label, apologies, we need a 1 there and a 1 there. You can now label the corners of this box. Remember, don't call this D because we have D already. Maybe call that one E. So the total tax paid is the area P1BEA. So it's P1BEA. And you want to label the corners like this to make it clear for the examiner. Don't do shading, write this instead. And then, as well as the total tax that has to be paid, we can also see what proportion of this tax is the burden of the consumer and how much of this is the burden of the producer. So the consumer burden of the tax, so how much of the tax has to be paid by the consumer, you can see that we've got this rectangle here. This is the total tax being paid. But you can use the old equilibrium here, do your dotted line, and this splits the box into two. And the top box will be the burden of the consumer, and the bottom box will be the burden of the producer. So the consumer tax burden is P1BCP, and the producer, so the firm tax burden, is going to be PCEA. And in this example, the consumer tax burden, you can see it's slightly larger, but there isn't very much difference. And we'll learn later on that how the burden falls depends on the slope of the demand curve. In the exam, you might also be given numbers here, and you might have to calculate the areas of these boxes or of the whole box. And you might need to compare the burden on the consumer and the burden on the producer.